If you're planning to sell or refinance your home, appraisals are a critical part of this process and can really make or break a big sale. As Ben Semino explains, there are some important things to know before you think about cashing in.
The home is most people's single biggest investment, so when it's time to find out what it's worth, the number has to be right. But homeowners generally don't get a say in who a bank hires to appraise their house before a sale or refinance. Still, there are protections.
So the lenders, banks typically choose the appraiser. It's a vetting process. So we not only have to have a license, we have to have insurance, and we have to provide work samples.
By law, homeowners are entitled to a copy of the appraiser's report, which they should thoroughly review.
Go through the report, specifically page 1, which describes the property, and make sure that information is correct.
Among the items to check: square footage, property condition, accounts of any updates an owner has made since purchase, especially kitchens and bathrooms. Appraisers are required to maintain confidentiality on behalf of their client, the bank. But it doesn't mean a homeowner can't offer up information which might help boost their value.
I think one of the great things that homeowners can provide me is a list of updates, because that helps me in regards to years, when it happened, what kind of update. And I'm walking through and I could see that, and I'm taking a photo, and that's going to be in my report as well.
If any mistakes are found, notify the lender who hired the appraiser to ask for a correction. If that fails, there's another step to take, but it requires finding comparable sales in your town.
It's called a reconsideration of value. And if they provide 3 to 4 good sales, the lender will provide those to the appraiser, and if the appraiser will make the necessary corrections if they're wrong or something was missed.
Finally, if all else fails, the ultimate check: hire your own appraiser who can do what's called a desk review of the appraisal.
And from their desk, they can review that report, tell you if it's good, fair, or poor. And then based on that, you'll know if another professional agrees or disagrees, and you could provide that to the lender. And that's more ammo showing that you've gone out and hired someone and that you have a valid case.
So Ben explained the importance of appraisals. Now we're going to turn to scoring the best interest rates. Joining us today with some tips for how to navigate this new territory is Ed Mainland. Perfect name for real estate. He's director at Chase Home Lending for New England and New York. Ed, welcome. So what should you do to financially prepare for buying a home?
Hey, thank you, Karen. I would first off is educate yourself in the process. I always say knowledge is power, and in this case it is. So understand the mortgage process. Research some local grants and opportunities for yourself and your family. But I would go into it and find yourself a local lender that you're comfortable to work with.
So should you accept the first mortgage offer you get, or what should you ask for to get the best rate?
So I would understand your own profile. Each customer is like their own profile is like a fingerprint. Every single file is different. Therefore, you shouldn't accept the first rate, because some of the times that you have excessive debt or less debt or different type of collateral that you're buying will determine the rate that you're actually looking for. So in real estate, you're most likely not going to buy your first home. So when it comes to purchasing, you shouldn't go for the first rate that you get presented.
Hold out and see what you find.
Yes.
So for current homeowners, when will it make sense to refinance your mortgage? Should you expect additional rate cuts coming up soon?
Well, if you purchased your home in the last 18 to 24 months, I would definitely consult with a home lending advisor to discuss, the current market rates. To touch upon, the next cut, we don't know what it is. So affordability is the best part of this. So if the current rate cut allows you to have the right monthly payment, I would just refinance now, because if it provides you the best opportunity for your family's payments, that's what I would go with.
Now, it's the mortgage process is so confusing. Do you think people should go with this alone, or try to use a mortgage broker? And what are the advantages or disadvantages of using a mortgage broker?
So Chase has entered the mortgage institution for many, many years. And, we have our own home lending advisors here in Boston in the local branches, which we have about 61 branches in Massachusetts. You can walk in, understand what you can afford, the monthly payment that you can get, and we have many tools and resources available to you on chase.com as well. And you could also go to chase.com/afford, and we can provide you any of those grants that we discussed earlier, and the details of it, so you can get a better understanding. As I mentioned in the beginning, knowledge is power.
Knowledge is power. So in the first segment, we talk about bias in appraisal. How do we screen out for bias in mortgage lending? What steps is Chase taking, or what steps can a consumer take to help screen out bias in lending?
Well, it's each, like I mentioned earlier, Karen, each individual is like a fingerprint, and each individual application is going to be different. So understanding the bias is through your communication with the individual home lending advisor. And as you can see, JP Morgan Chase is a trusted advisor. So if your customer chooses to walk into us, I'm sure we'll take good care of them.
Okay, that's a good Chase answer. Ed Mainland, Executive Director for Chase Home Lending. Thank you for joining us today.
Thank you very much.